Hi everyone, how are you doing? Welcome again to yet another day with us with our webinars, our live trading sessions, live analysis, live trading, live recommendations made just for you. How's everybody? Hope you're doing great. I hope you had a fantastic 21 hours of trading since we said goodbye the last time. And I really hope that today will be more of the same like yesterday. Yesterday was a good day for us. 4 of our recommendations were triggered out of the 10 recommendations that we gave yesterday. I'm sure you remember that. One of them reached its limit. Another 2 closed in some profit at market, or are currently in some profit at market if you did not close them yet. And one had very small loss. So with this, guys, first of all, what I'm gonna do here today, it's the last day of the week. What I'm gonna do is this. I'm gonna first of all talk about the recommendations that we gave yesterday, and then of course we are going to talk about today's trading. But first of all, of course, you know me, I really care about the chat, guys. I really care about the chat, so I'm gonna update that, the chat link, because I want to see everything you say, every comment you give me. That means a lot to me, and yeah, it is now working. So welcome to the last day of this week. It was a good week for us. A lot of the recommendations that we gave were closed in profit, and especially yesterday. Yesterday was also a good day for us, and of course we really hope, we are expecting that the last day of this week is going to be more of the same. Okay, so keep your fingers crossed and let's start this day. First of all, what I'm gonna do here is I am going to talk about the recommendations. As I said to you, well, I'm preparing the screenshot for you. I made a table just for you, and I want to show you that table. First of all, I'm going to show you the signals or recommendations which were not triggered. And these are the ones that you can see on the screen right now. First of all, we had a recommendation to sell the euro at 9.65. Of course, I'm very happy that we did not get to 9.65. I will tell you why in a little bit when we start talking about the euro. We also had a long recommendation on gold at 1459.3. We did not drop that much, which is also made me a happy man. Also, we had a short at the pound at 28.13. Also, again, we did not drop enough to trigger that, and that made me happy as well. I wanted all these 3 instruments to go up, and they did, of course, in different the distances. Some of them, or mainly the precious metal, moved more than the other 2, the currencies, European currencies. We also had a recommendation to short the dollar yen at 109.05, and I'm also glad we did not get this high. And on the Aussie, we gave 2 recommendations, and both of them were not touched. So from out of the 5 instruments that we talked about yesterday, only the Aussie dollar did not trigger any signals. So we had a sell at 68.27, that was not touched. We had a buy at 68.90, that was also not touched. But what about the signals which were triggered yesterday. Let's see. Here they are, guys. First of all, we had buy euro at 10.15. This was triggered, it was touched. The stop was at 9.65 and the limit was at 10.63. We did not get to the limit or the stop. Both of them was not touched or even approached. The market rate, I checked the market rates just before we started this webinar. It was in a profit of about 10 pips. The second one was the pound. We had the long at 28.67. This was triggered. We placed an order and the order was done, and we were in the market in a long position at 28.67 with a stop at 28.13 and the limit at 29.16. Unfortunately, we did not get to the limit and we completely traded completely away from the stop. The market rate just before this webinar started indicated a profit of 12 pips. Very small profit on the euro and the pound, but of course, 10 pips here, 12 there, 15 there, 11 there, and they add up to something. Now, the best recommendation that we gave yesterday was gold. We had a recommendation to buy at 1467.6 with a stop at 1458.8 and the limit at 1472.5. After Powell started talking yesterday, I'm sure most of you know that Chairman Powell, the Fed chair, had testimony yesterday in the Congress, and after he started talking, the precious metal moved to the upside, reaching its highest level for a week, or I think a little bit more than a week. We're going to check the chart today and see, reaching 1474 point something. I don't recall the exact high, but what I really recall is that our limit at 1472.5 was hit, leaving us with a profit of 49 pips, and I love that. The minute the price got to 1472.5, I started dancing. So it was very, very good for me. I felt great about this limit done, because as I said before, guys, we are in front of what could be a very important trading opportunity on gold and also on the euro. And I am a bull in both markets, euro dollar and gold dollar. And it makes me a very happy man to see that yesterday the recommendations that we gave on both instruments ended in profit, especially the one which got to its limit. That made me extremely happy, guys. One recommendation that suffered loss, of course it's a very, very small loss, but it's still a loss, was the short on the dollar yen. We had a short at 108.50 with a stop at 109.15 and a limit at 108.06. Well, what really bothered me about this trade is that we got into some profit. I think the profit got to around 28 pips. The floating, of course, it was a floating profit. The maximum floating profit it got was 28 pips, but unfortunately, this morning when I woke up and I was getting ready for this webinar, guys, what I saw is that this trade is in about 8 pips of a loss. So we shorted at 108.50. Unfortunately, the price this morning, the ask price, according to our favorite broker in the whole world, QTime FX, was about 8 pips above that, which of course left us with a loss of about 8 pips. So this is the trading result for yesterday, guys. Overall, of course, the total, as you can see on the screen, the total was 63 pips. Not bad at all. in my opinion. What do you think about it, guys? Let me know in the comment section of this video if you believe that this is a good profit for one day, or if you believe that you want more, you want to achieve more on daily basis. If you think that 63 pips a day is not really your type of satisfactory target for trading in one day. So these are the recommendations, guys. Again, I'm going to show you the ones that were not triggered. Here they are. 6 of the 10 recommendations we gave yesterday were not touched. 2 of them on the Aussie dollar, so we had no trades on the Aussie dollar, but we had open trades on 4 instruments, the other 4 instruments that we analyzed yesterday and we talked about yesterday. That was, of course, I was waiting for the Aussie to touch one of them, but nothing happened. However, of course, these beautiful 4 recommendations, especially the gold recommendation, they made my day. They made me a very happy man. When gold got to its limit, I was very happy. And of course, that was added to in profit on the euro and on the pound. Just a little bit of profit, very small number of pips, but of course they add up. And we suffered a very small loss on the dollar yen. As you can see, all in all, it was a good day. In my opinion, 63 pips a day, that is a good day by all means. If I manage, imagine yourself getting this kind of profit every day. We have around 21 days of trading days, of course, working days in a month. The average is 21 days. So imagine yourself achieving 63 pips on 21 days. That will add up to, I think, more than 1,300 pips, more than 1,300 pips. Can we do this every day? Well, let's hope so. I'm going to try to do the same for you guys today. I'm going to try my absolute best to finish this week on a high note. And that, of course, requires us to go straight to the chart, start talking about trading opportunities today, and before we do so, what I really want to remind you of is this, guys. Of course, I am talking about the generous sponsorship of QTime FX, our favorite broker in the whole world. As you know, guys, these webinars are here. They are free. They are available to you because of the generous sponsorship of QTime FX, our favorite broker in the whole world. Why is it our favorite broker? Of course, first of all, because of the unbelievable spreads they are offering. Imagine yourself trading with only 0.4 of a pip on the euro dollar and the dollar yen. And of course, to add to that, we do not charge any commission. A lot of brokers offer attractive spreads, but they, of course, cover that with commission. No, not QTime FX. We don't do things like this here. What we do is that we provide you with the best trading environment. And that starts with the spreads and, of course, extends to zero commission. And, of course, as you know, our current offer, which is really achieving a lot of interest, a lot of open accounts, a lot of people coming to us asking about the bonus, and they open the account when they know the terms. Why is that? Because, guys, we have $500 of a bonus for you. And of course, the bonus can be only trading credit, just a number that your broker writes in your account without having real money in the deal, but not this one. Our offer comes with the magic word, withdrawable $500. Not only tradable, but withdrawable. So you can withdraw the $500. Of course, to know all the terms, all the conditions that you need to know in order to use this great opportunity to get yourself $500 of real money please contact us at fx_educast via Telegram, and we will be happy to answer any question that you may have, and we will be extremely happy to help you every step of the way in opening your real account with QTime FX. So with this, guys, we can now start talking about the trading opportunities for today. I'm gonna try and cover 6 instruments today. Most of the days we are covering 5, so I'm gonna try and push it a little bit towards the 6 instruments. And of course, as always, we start with the euro. And what a beautiful day it was for the euro yesterday. In terms of the size of the movement, it was very small. But in terms of the meaning of this movement, that was a huge day for the euro. And today, of course, is going to be also as huge, also as important. Today's close, as a daily close and as a weekly close, is going to play a very important role in determining the direction of the next move on the euro dollar. And let's start immediately talking about what is it that makes me believe that we are going higher. We are going much higher. Guys, remember, I'm gonna focus on the chart for a minute. Remember, guys, for many days, for at least 2 weeks, I have been talking about the importance of 109.95. Even when we were around 111, I was talking about 109.95. Why is that? Because it is really a very important level. And why is it important? Well, let me show you. First of all, it is the Fibonacci 61.8 level for the whole move to the upside from the 29th month low, which was seen early in October. After reaching this low, 108.78 on my chart, of course, it's going to be 1-2 pips different between one broker and another, or one chart and another, but it is around 108.78, maybe around 80, something like that. So after reaching that low, what happened is that the euro was able to recover in a very impressive way. 300 pips to the upside. Actually, if you want to calculate them down to the pip, they are 305 pips from 108.78 to 11.83. That was a fantastic trip to the upside by the euro. And of course, after that, it was time for some correction. Now, the correction that we favor and we like most, of course, is the one that comes in 3. That is, of course, according to what we believe in Elliott wave theory. 3s are moves that generated against the main direction of the trend, while 5s are generated in the direction of the trend. To tell you the truth, here it is a little bit tricky to find a 5-wave sequence. You can do that, but you have to count some very small waves as a full waves, so it is not very clear. But I have something that is extremely clear and extremely helpful, and that is the fact that we have 3s to the downside. 3s to the downside, and that of course confirms that the moves to the downside are corrective. Let me show you what I mean. First of all, before I talk about this beautiful thing here, I want to take you into an example that happened earlier. As you see, guys, we were recovering, we were moving to the upside, and then we had a move of 3 waves to the downside. After that, the market moved higher. And if you want the truth, I can find you another 3 to the downside. I'm sorry, not this one. Yes, this one. This is the one I'm looking for. After this is another 3. Elliott said very clearly, guys, that 3s are moves that go against the main direction of the trend, the main direction of the market. So when you see 3s happening to the downside, that confirms that the move of the main direction of the market, which of course we refer to as the trend, is to the upside. We had a 3 here, very obvious in my opinion. As an Elliottician, I use Elliott wave when, or the wave principle, when it is clear. When it's not clear, when I can't count the waves, I just put it on the shelf for a while. But sometimes the count is clear, and that gives us a fantastic trading opportunity. So in my opinion, as someone who has been using Elliott wave for 16, 17 years, something like that, this is an obvious 3. Of course, after that, we had a move to the upside. And usually what we should expect after a 3 is that the move against the direction of the 3 should surpass the top from which the 3 started, or the price extreme from which the 3 started. We had the ABC here starting around 110. So from here, after the termination, we were expecting a price move above 110. And of course, this happened here with this strong penetration of previous resistance. Again, guys, the same kind of situation here. We had a 3 to the downside. Of course, after that, what we should expect is the price to go higher beyond the point from which this 3 started. Here it is 1063, and as you can see, we penetrated that here with a strong move to the upside. And these are very small, as you can see, but they were very effective, because going long here with the closing it here left you with a good profit. Again, if you did the same here and close it just above here, that is some good profit. Now, these are small. Just look at this beautiful, beautiful 3 to the downside. What is really beautiful about this 3? I'm going to show you, and I'm going to let you know. First of all, it's an obvious ABC. And usually, of course, the C wave is at least equal to the size of A. And we prefer to be longer than that, because C waves are 3 waves. And in Elliott, the 3rd wave is the strongest, be it in the direction of the trend, in which case we call it a wave 3, or be it against the direction of the trend, in which case we call it wave C. So wave 3 or wave C, they are both well known to be strong waves in the direction that they move in. Of course, 3 moves in a direction and C moves in the other direction, but in both cases, they are expected to be strong. They are expected to be long. They are expected to travel more than the previous wave in the same direction. So wave 3 is always expected to be larger than wave 1. It's very rarely, it can happen, of course, that wave 1 is larger, but it's a very rare situation. The vast majority of times, wave 3 is larger than wave 1, and wave C is larger than wave A, at least equal to it, and sometimes larger than it. So as you can see here, guys, the size of wave C is obviously much larger than the size of wave A, almost double. I think it is around double. Here we dropped from 1183 to 1171, and that leaves us with what, 112 pips. Here we moved lower from 1176 to 988, yesterday's low. That is 188 pips, right? So it is almost double, or it can also be 161.8% of wave A, which is of course one of the most favorite targets for wave C. So all in all, this is a very good looking ABC, and the fact that it found support, I'm not going to say terminated, I really hope it is terminated, but we cannot say for sure right now. We need more evidence, but the fact that it found support very close to the 61.8 level for this whole move to the upside, that gives much more strength and optimism to the bullish expectations. So we found support at a very important level, Fibonacci level. After a 3, an obvious 3, We have threes to the downside before. This is a three to the downside, much larger than these ones. And of course, this is very close to psychological level, guys. $1.10. And if that was not enough for you, this is the bonus that I'm going to give you. Daily highs and lows very close to this level. As you can see, the daily high for October 3rd, October 4th, October 7th, October 8th, and the daily lows for October 11th and October 15th. And recently, of course, this week, every day this week, the daily low was extremely close to this level. So many daily highs and lows very close to this level. This is one point. The fact that it is a psychological level, $1.10, this is another. And of course, my Fibonacci level, this is the main reason why we love this level. And if that was not enough, I'm going to give you even a fourth point that shows you how important 109.95 is. And that is the fact that the last part of the recovery attempt seen from the 29-month low started here at 89. This is the low here is 89, very close to the Fibonacci level of 95, only 6 pips away from it. And yesterday's low, guys, was 88. So we have 89 here, we have 88 here. It does not get better than this. So everything was pointing to the importance of 109.95. And then, of course, this beautiful green candle appeared, and the attempt to recover from a key support at 109.95 started. Up until now, we're doing great. But as you can see, we are now testing the moving average band. And you know me, guys, a failure to break above or to cross, this is the word that analysts use. I use break, but you know, the right term is to cross above the moving average. Failure to do so will leave me in doubt about the strength of the euro. I will start thinking, well, whoa, the euro is unable to break above or cross above the moving average band. Then how can we say it is strong and it's going to the upside? So we really, guys, and today, I don't want this postponed to next week. I want to see the euro penetrate, cross, break above the moving average band on the hourly, 4-hour chart, and even the daily chart. I'm going to check all of them, and I'm going to tell you which are the levels that we need to care about most. First of all, on the 4-hour chart, it's not very far. Currently, we are in the 20s. It starts at the 20s. As you can see, the 35 is at 21. It's the blue number here, 21, and the 49 is around 38. So 20s and 30s. This is the area that I really need to care about. And if I draw a horizontal line here, looking for what is the best support inside this area. Support or resistance, of course, it was a support, it turns into resistance. Now I'm looking for resistance. So what I'm going to do is I'm going to, first of all, use another color. And I'm going to start moving it until I believe that I have a resistance that I really can use to build today's strategy. November 7th low was 35, 1035, and November 11th high was 43. 8 pips between the two. As you can see, on the way to the downside, we stopped in this area, and on the way to the upside here, we stopped in the same area. I'm gonna use, of course, as you can see, the moving average, the 49 SMA is moving to the downside because, of course, the price was moving to the downside for so long, and it is getting closer and closer to this daily low here, November 7th daily low, 1035. So I'm going to use 1035 as my resistance for the day. And this is the first piece of information I'm going to leave on the chart for you guys. Resistance, 1035. Support, I'm not going to even look for a support. I'm sure you agree with me. 995 Hands down. There is no competition, guys. This is the single most important support for the time being. So with this identification of the resistance and support, we can start building our trading strategy. But of course, before I do so, I just want to take a look at the hourly chart and the daily chart, looking for clues. As you can see, guys, this is also something that is good, something that we really like here, that we are trading above the moving average band. And not only that, the SMA 35 is trying to cross above the SMA 49. That is a good sign, because the smaller duration the moving average is, the less periods it covers, the faster it moves. So the 35, of course, moves and turns before the 49. And when they cross, that is an indication that the market is going to move in the direction of the cross. So here we have a cross to the upside. As you can see, it is still, they are still very close to each other, but the fact that the 35 is now above the 49 and it was below it only hours ago is a very good thing. So this is another indication that the euro could be heading to the upside. What about the daily? The daily, oh my God. The 49 daily SMA is very close to the resistance that we talked about, 35. As you can see, it is here around 40. Yes, it is 40 here, as you can see. So it's very, very close to 35. And that, of course, further confirms the importance of 35. I'm going to use 1035 as my resistance. How about a look at the indicators before we place our long and short orders? Well, yeah, here, as you can see, guys, we have reached the overbought for the first time in a while. It's not a very long while, but it is a while, in days, in a number of days. And we are moving to the downside. This can be a weakness sign. So on the hourly chart, we can retreat a little bit. But of course, since we are trading above the moving average band, then we have a support to believe in, and that is, of course, the moving average. Even if we drop a little bit, as long as we do not break below this moving average, everything will be fine. But once we break below this moving average with this kind of behavior on the RSI and stochastics, both of them, the stochastic reached the overbought and started falling. The RSI came very close to the overbought and started falling. And if that is coupled with a penetration of the price below the moving average band, which is around 10.10 now, 10.9, that would be a weakness sign. But of course, even if we start trading below here, that is not very far from our beloved support 109.95. So we are keeping our attention completely focused at 109.95. Keep that in mind, guys. 109.95 is going to be our support for one more day. We need to see the price move higher away from that level in order to build more confidence in what could be one of the best trading opportunities of this year. Did you hear that? It could be. This move to the upside from 109.95 could be one of the best trading opportunities of the year. And that is why we are keeping our eyes, both of our eyes, on this very important level. Now I want to see what the indicators say on the 4-hour chart and the daily, and then we are going to place our orders. So, not very good. Not very good. You see, guys, why I am checking these things? Because you may find things on the chart that support or actually completely negate what you believe in. So here, what I see is that the price here is trying to break above the 35 simple moving average on the 4-hour chart. And at the same time, the stochastic is about, it did not cross yet, but it is about to cross to the downside, giving a sell signal. And that is not a very good situation. So we need to be ready. If 109.95 is broken to the downside, we need to go short. But as said yesterday, when trading such a key and very important level, you need to give it some time to work its magic. Not only 5 or 7 or 10 pips below it and you say, boom, that's it, it's broken. No. With these levels, you need to be more flexible. So yesterday we used an entry level that is 30 pips below this level, and we were right. Why? Because the price dropped 7 pips below that level before turning to the upside for around 40 pips. So we don't want to be in on the short very early. If 109.95 is broken, that's it. We give up in our efforts to look for a bottom around the current levels, and we will wait, of course, for other levels to see if they can provide the kind of support that 109.95 has given so far, and then we can re-establish long positions. But if it's broken, we need to give up. If it's not broken, I really am going to be extremely enthusiastic about the chances of going higher. And these come with one condition, guys. Euro, please stay above 109.95. I'm begging you. If you do, you are going to give us probably one of the best trading opportunities of the year. And if the euro is going to be good to us, it will continue trading above 109.95 for one more day today. And come closing time, we are going to close away from this level much higher, above yesterday's daily high yesterday, or today's Asian session high was 1030. That is 42 pips above yesterday low. Yesterday low was the lowest in almost a month since October 15th. Yesterday was November 14th, so it's almost exactly 1 month. And the lowest, after reaching the lowest price in a month, if we get to close the day today and the week as a whole on a high note, then that would be fantastic for the opportunities that are going to emerge next week with breaking resistance levels on the way up. So yeah, guys, there is a possibility of moving to the downside. Of course, if we fail to break above this moving average band, that would be the first indication that the rebound from 109.95 is not going to be as strong as you want it to be, Munther. And of course, I'm a reasonable man. I give in to the chart. I love the chart. I'm a radical technical analyst. That's what I call myself, a radical technical analyst. I always follow the chart. I always make my decisions on the chart, and I really, really believe in the power of technical analysis of the chart and guiding you to profit. So it's very clear, guys, in my own opinion. It is either breaking above 1035 today. I want this to happen today, or continue being in a weak situation where the possibility of breaking below 109.95 will emerge at any moment, and it can, of course, push the price lower against our hopes and expectations. So let's start, or before we start, just one last look. Sorry, guys, just one last look at the daily. And yeah, now this is a good chart. Now this is a good chart. Look at this, guys. Yesterday low was the lowest in a month, and as you can see, after reaching the lowest price in a month, we closed the day in the green. As you can see, this is a green candle, and I love that. This is what we call a reversal day, when the trend or the move in the market reaches new extremes. In this case, we are talking about lows. Of course, if the market was moving higher, we will be looking for new highs, but in our case here, we are looking for new lows. So we did get our new low yesterday, 109.88, and then come closing time, the market closed in the green. It was a green daily candle, and I love that. When this happens, it's usually an indication of reversal, and it did happen in the recent past. I'm going to show you an example. The price was dropping. Here we reached a new low that was not reached during this move to the downside on October 1st, and after that, as you can see, boom. So keep your fingers crossed. We're going to see another boom, just like the one we saw on October 1st. I really hope that happens, and I'm ready to take advantage of it. One of the nice things on this chart, of course, after the very important reversal day, is of course the fact that the stochastic is in the oversold area and we have a cross. Of course, they are still very close to each other. We need to see the fast stochastic move higher and away from the slow one in order to give more confidence to this turn here, turn in the indicator, and it should be accompanied with a turn in the price to the upside. And of course, the RSI is telling a similar story. We are very close to the oversold here. We did not touch the oversold, which is good. You know, not reaching the oversold area is good. It indicates strength. This is something that not a lot of people know. They think, maybe 90% of traders, they think that the RSI should move from overbought to oversold all the time, but that does not have to be the case. On the contrary, when it does not reach the oversold area, that is an indication of strength. And I'm happy that it did not reach the oversold area here. And now the direction of the RSI is changing to the upside. So the daily chart is really, really positive. But the hourly chart and 4-hour chart are calling for some caution unless we break above the moving average band, which is in the upper 30s. That's why we are using 1035 as our resistance. So let's start issuing recommendations for today, hoping that they are going to leave us with the same kind of profit like yesterday, or maybe even better. So I am going to definitely recommend euro by 10 pips above the resistance with a stop. I am still going to use 30 pips below the support. So I don't wanna be on the short side of the market too early. Okay, if the market drops 10 pips, 15 pips below 109.95, I'm still gonna keep my long position. But if it's 25 or 30, then it's time to give up. That's why I'm placing my stop, and it's going to be also reverse at 109.65 limit. Yesterday we used the limit 1063, but of course today this would be extremely close to the entry level. So we need to find ourselves another target, and of course I'm going to give you two targets. Target 2, I made up my mind a long time ago. It is 1183, the top from which this corrective pattern has started. 1183, this high. So if I buy here and we penetrate the moving average to the upside, what I really want to see is the price at least testing, if not surpassing this high here. But I still need a closer target, and for that I am going to go to the hourly chart. I'm going to use every technical tool that I have in order to try and estimate what could be a good target for a long at 1045. First thing I'm going to use is retracement levels. No, very close. The 38.2 is very close. 81. Let me see all of these levels and let me try to decide on them. The 50% retracement for the last part of the move down, I can use it from this point. It's almost exactly the same. It's not going to be different. Here we have the 50% level at 1082, while the 61.8 is at 1103. 82. Now we do have these tops here. They are very interesting. This is 92 and this is 93. As you can see, they are extremely close to each other. These two tops here, between the 50 and 61.8 retracement levels for what I really believe to be a wave C. Wave C, of course, needs to be updated to this low. I really believe that this is a good target, so I'm going to use 93. 1093. That would leave us with what? 48 pips. Fantastic, very good. This is the kind of target that a lot of you guys like, and I'm seeing a lot of action on the chat. I really hope, guys, that the reason you are excited today, and there is a lot of comments, is that yesterday we made good profit. And I really hope that each and every one of you had that profit in their real account with QTime FX, not on a demo, on a real account. I really hope so. So let's continue with the recommendations, and before the break, I'm gonna take a look at your comments. The sell, of course, is going to be a reverse. Sell at 965 with the stop. The stop is going also to be a reverse at 1045. Okay. Now the limit. Remember from yesterday we had, I keep saying limit because I forget that we have to give two targets now. Target 1 and target 2. So from yesterday, I'm sure you remember, 109.03 was our initial target. We're going to use the same today, and 108.14 is the long-term Fibonacci 78.6 retracement level. Why is 109.03 an important level? Let me show you. This is the line. It's still here on this chart from yesterday. As you can see, when we were building the space, we found support several times at or extremely close to 109.03. As you can see, September 26th daily low and 27th. This is the agent session for 27th, of course, and again on 28th, really early on the day, and on October 2nd. All of these days we had the daily low, or at least the session low, very close to 109.03, and I'm going to continue depending on it. These are the same targets as yesterday, and the same entry point as yesterday. Sorry. This is the blue one, and this is the red one. So these are the recommendations for today. These are the same targets as yesterday. As you can see, target 1, 109.03, exactly the same. Target 2, 108.14, exactly the same. The entry point 109.65 is exactly the same, but of course we changed the stop because now we are closer to 10.45. This is where we want to be in a long position. Stop is 109.65, just like yesterday. Our initial target is 10.93. Our second target is exactly as it was yesterday, 11.83. So this is the euro recommendation, guys, for now. I really hope that we get in on the long side of the market. But of course, if we break 109.95, I have zero problem selling the euro. You don't need to get married to trades, guys, or married to your view of the market. Once support or resistance is broken to the other side against your expectations, if this support or resistance is very important, then follow the direction of the break without hesitation. I don't want you to be the kind of traders who always believe in one thing. No matter what happens, I'm going to buy the euro. Munther is very excited about a long position on the euro, so I don't want to sell. No, don't do that. I am excited about a long position on the euro as long as 109.95 is not broken. If we break 109.95 with an enough number of pips, like 25 or 30, then I myself, the guy who is extremely enthusiastic about the possibility of a major move to the upside, I myself am going to sell the euro. Okay, so these are the trading recommendations for today on the euro. Guys, please, I'm going to leave them on the chart for you for a minute or so. Please, if you need to screenshot this or go immediately to your QTime FX live account and place them immediately. So with this, guys, we're going to take a break now. And the first thing that I'm going to do after the break is I'm going to respond to your comments, guys, and I'm gonna use the first few minutes of the next hour in talking to you. I love talking to you. I love the communication that we have, and I love reading what you have to say, especially about yesterday recommendations. So with this, guys, we are going to take our initial break for the day, just like initial resistance and initial support. Before I do, I want to give a huge thank you to QTime FX for the generous sponsorship of this webinar. We are here, guys, online talking to you about the best trading opportunities in the market for one reason and one reason only. Because QTime FX, the guys there, they were generous enough to sponsor this webinar. They told me, Munther, come and give our traders, our clients, the best trading opportunities you can find on the charts. We want you to tell them how to make profit in the market. You have 19 years of experience, you're a chartered market technician, CMT, and you have clients in 4 continents, 13 countries. So we want you to help our clients make money. That is what a good broker does. You know, good brokers, they care about their clients. They want you to make money. They don't want you only to open an account and then don't know what to do with it. To a lot of traders, you know, they open the account and the brokers are happy. We have new accounts, but then the traders don't know what to do with it. But still, the broker is happy. They don't care a lot about what happens to you. Not QTime FX. QTime FX are showing you how much they care about you by sponsoring these live trading sessions. And I'm sure when you guys followed yesterday's recommendations and made that kind of profit that we made, I'm sure the guys at QTime FX were extremely happy for you because you are their clients and they love for you to make money. So come trade with a fantastic broker offering you fantastic spreads, zero commission, and on the top of that, a very generous bonus of real withdrawable money, guys, not a trading credit. Okay, it's real money. $500 can be yours when you open your account with our favorite broker in the whole world, QTime FX. With this, guys, I'm going to take my first break today. 5-6 minutes or so, and I will be immediately back to talk about more opportunities in the market. The first thing we are going to talk about is, of course, your comments. So see you in 5, guys. Okay, guys, we are back. How's everybody? How are you guys? Very happy to be with you for the second hour today. Now, of course, we talked about the euro. Before we move on to the next very exciting instrument, precious metal, the one that I traded very well yesterday, I want to take a look at your comments, and I can tell that you guys are excited. Okay. Let's see. First of all, I welcome everybody to this webinar. Another day, another dollar. This is our motto here, and we made that happen yesterday. We're hoping for the same today, and I really hope that you guys are enjoying this on a live account. I don't want you to be trading demo. These good recommendations that I'm giving you need to be placed in a real account, and that's why I want you to come and open your account with QTime FX, our favorite broker in the whole world. Sonatria is talking about yesterday's profit, 63 pips. She's saying that it is a very good profit, or she's actually saying it is enough for her. Mr. Dawanis, nice, thank you very much, buddy. And someone called Munther Marji says, hey guys, this is me, guys. I'm writing comments to be engaged with you. Blaine, Ram Heinz Blaine, Munther, I got 47 pips of profit yesterday. That's fantastic. The dollar yen, yes, the dollar yen. Unfortunately, today when I woke up, we were back very close to where we opened this position, actually 8 pips in loss. But yesterday, it reached around 28 pips of profit. That was the maximum it reached, so it was very good. I'm very glad you enjoyed it. Well, thanks, bro. Welcome, bro. Every day I'm gonna try and do the same thing for you guys. Gabrielle, I'm not sure if we had Gabrielle before. Hi guys. So hi back to you, Gabrielle. If you are new, if this is your first day with us, welcome. And if you are returning, then you are honoring us with your presence here. Who else is here? Michael. Fantastic, Michael. Michael is making some profit on the pound dollar. That is fantastic. And Munther is on fire. Thank you very much, buddy. Yeah, yesterday was a good day. I'm very happy about it. Very excited about it. But you know, we can do more. So I want. Yesterday we had one limit and 2 other signals or recommendations ended in profit. So overall we had 3 winners. But the profit was modest. You know, if things go well today, then maybe we'll have 2 or even 3 hitting the limit at the same time. And keep your fingers crossed. That is what I'm praying for to end this good week with. Very authentic signal from Jordan. Yeah. Coyote Adesina, hello sir, and thanks for your efforts. You are most welcome, buddy. Thank you very much for being here. It is an honor for me to have you guys from all over the world, and I promise you I'm gonna try and do my best for you each and every day. Nick is talking to another person on the chat. Long time no see. And Julie, she is back. How are you doing, Julie? Fernandez is thanking us for these recommendations. Thank you very much for being here, Fernandez. Nick is asking about the RSI. Munther, can you explain RSI indicator with euro dollar? Of course, buddy. Of course, we're going to immediately talk about that. I'm going to take a 5-minute out of the analysis and go into the educational mode. So euro dollar, this is the template that I use for my indicators. It has 3 here, and of course the moving average on the price chart. So I am going to delete these ones here. I'm going to focus on this one. Sorry. Yes, this is what I want to do here, and I'm gonna, yes, only price and RSI, and I'm gonna explain that. I'm gonna take 5 minutes. Well, RSI is an oscillator. That means it moves up and down, and some oscillators have limits. They move between, like RSI and stochastic. Some do not, like the MACD, for example, and rate of change and momentum. So this indicator in specific, this oscillator in specific, moves, of course, between the 0% and the 100%. It is one of the inventions of Mr. Wilder. It was published in his book, in 1978 book, New Concepts in, I think it's Technical Trading. This is the name of the book. Not analysis. I think the word trading is in the title of the book. He is a great man because he left us a number of indicators, 6 indicators in that book. Some of them are very, very popular with us, like the RSI. How to understand the RSI, how to use it in building trading strategies? Well, there is an area that we call overbought, another area that we call oversold. When the RSI drops too much below a certain level, we call that being oversold. And of course, when it trades above the other limit on the other side, on the upside of the range, of course, that is overbought. To most people, the limits, and of course this is what Mr. Wilder himself said, the limits that we should use are 30% and 70%. Now, that is not the only limit that people use. A lot of people use 25, 75. But what we always do is use, or most of the time, not always, is use 2 limits that are equally away from the upper and lower limit in this indicator. So 100%, if we drop 30% and we place 70, we place the upper limit at 70, that means we need also 30 pips or 30%, sorry, above the 0, and that leaves us at 30%, 70%, 30%. Both of them are equally away from the upper and lower limit of this indicator, this oscillator. And if we use 25, that means 100 minus 25, that's 75. We need 25 above 0. That leaves us with 75 and 25, just like what you are seeing here on this chart. Now, the main concept is that after reaching, of course, there are many ways to use the RSI. When I teach RSI in my educational webinars or seminars or training, private training sessions to some investors, I explain how to use RSI in 6 ways. So we cannot, of course, talk about all of them here, but I'm going to try to mention most of them as fast as possible. The main concept, or the main way that a lot of people use RSI is that when it's overbought, they start looking for an indication of reversal to the downside. And when it is oversold, they try or they start looking for an indication of reversal to the upside. Just like here, for example, after reaching the overbought, now the RSI changed direction and started falling, and the price with it, as you can see, when the RSI reached the overbought here, we were creating a topping area here from which we started falling again. So here we start looking for any good reason to sell. Of course, if the RSI itself is overbought, that by itself is not a reason to go short. And if it's oversold, it's not a reason to go long. It is an indication that you should start looking for that possibility to happen. But without a break from the price itself, it means nothing. The RSI can reach overbought or oversold and continue to be there for a long time, while the price is still going higher and higher, and you are still looking for a level to short at. But if you feel that just because RSI is overbought, now I need to go short, then you will face a lot of losses if you follow this method. But on the other hand, if you wait for the RSI to go overbought or oversold and then look for a sign of reversal on the chart, like breaking a trend line, breaking a resistance or support level, horizontal level, and a retracement level, or crossing the moving average, in all cases, or all these cases, when you support that reading of the RSI in the overbought or oversold area with other tools, especially tools from the price, this is very important to me, then you can achieve a lot of good trades using the RSI. So this is the main method that you can use, and I'm going, of course, to show you some examples on the Euro chart. Overbought here, but of course, as you can see, we reach a higher high, so we need to wait for some kind of indication that the price has reversed. After that, it dropped, so selling here with, of course, a limit around this area, that would have been a very good idea. Again, here we are oversold, but just because we are oversold, that does not mean we should immediately go long. Again, as you can see, we have a move to the upside. It's not very large, but of course it's a move to the upside that can generate you some profit. If you buy here and close your position here, that is some profit. Again, here we have the same oversold, and then the price starts recovering. You can use this recovery and make some profit. And here, of course, that was the last time. 3 times we have 3 opportunities to go long and short on this chart. Another indication is the direction of the RSI itself. And the direction of the RSI is to the downside. That means weakness should be expected. When it's to the upside, it means that strength should be expected. And of course, we have a lot of ways to use the RSI. Actually, there are 6. There are 6 that I always teach when I talk about the RSI. But the RSI by itself, when I have an educational webinar about it, I always take around 2 hours, or maybe just a little bit less than 2 hours talking about it. So of course, we cannot talk about it in details here. If we can arrange with QTimeFX to have educational webinars in addition to the trading sessions that we are having on daily basis, I would be a very happy man, because I would explain to you guys how to fish. I'm not going to only give you a fish, I'm going to show you how to fish. And that is, of course, something that we can discuss with QTimeFX and FX Educast. And I'm going to do just that. And if we find it to be the right thing to do, we are going to do that for you guys, because I want you to be great traders, great analysts. I want you to make decisions yourself. I'm very glad that you come here every day and you are interested in what I think of the market, but I want you to do more than that. I want you yourself to be a trader, to be an analyst, giving people your opinion about the market and spotting the fantastic trading opportunities in the market. So, Michael, oh, sorry, Nick was the one who was asking about RSI, not Michael. And my salute to you guys, both of you, Nick and Michael. So, Nick, maybe we will have some good news for you later in the term, of course, of having an educational webinar about RSI or anything else that you guys like. Blaine, yeah, and what do you recommend with the lot size for 1 to 500? It doesn't matter what kind of leverage you use. When you are managing your risk, what matters the most is the lot size, not the leverage. Forget about the leverage. If it's 1 to 100 or if it's 1 to 1000, in both cases, you are going to be able to trade the size that fits your account in both cases. Even if you get a larger Leverage, I really do not recommend you boosting your lot size. So don't do that, guys. Don't do that. Okay? What you need to calculate in order to be a good risk manager, to be the kind of trader that they manage the risk on their account in a professional way, is very simple. Use the lot size that would leave you with a loss of 2 or 3% if your stop is hit. It's very simple, guys. If your account is $10,000, for example, then your stop should be something between $200 and $300. So for this, if your stop is, for example, 50 pips, then you want these 50 pips to be equal in dollar terms to $200 or $300, and that would leave you with a trading size between 0.4 to 0.6 of a lot. This is on a $10,000 account, guys. Some people open a $10,000 account and they believe they can immediately start trading 5 lots or 7 lots. They say, well, yeah, the leverage is letting me get in with 5 lots. I don't care about the leverage. Your responsibility is to manage the risk on this account. And when you take such very large trading sizes, you will not be able to do so. You will fail in risk management. And of course, guys, for especially the guys who were here day after day, they have heard me say this many times. You can flip a coin if you want, as long as you manage risk in a professional way. Risk management is the single most important factor in deciding if you are going to be a winner or a loser in the financial market. It's not analysis, guys. Nobody gets the market right every time in analysis. Nobody at all. Even if you're Warren Buffett, if he can get the best team in the world, he can pay the best salaries and bonuses to the best traders, analysts in the world, and yet a few years ago he lost $10 billion in 1 year. So it's not about believing that you have the analysis skills that will work every time, because nobody has that. Peter Lynch, one of the unbelievable legends in the world of fund management, he said, if you are, these are his words, word for word. He said, if you are good in this business, you're gonna get it right 6 times out of 10. You can never expect to get 9 times right out of 10. Guys, this is Peter Lynch, the legend, the man who made millions upon millions upon millions upon millions of profit for him and his clients for 14 years straight, between 1977 to 1991, when he was the best fund manager in the whole world. And he is saying that you cannot be right 100% of the time, or even 90% of the time. He said if you get things right 6 out of 10 times, then you will do great in this business and you will make money. So how can he say that? Of course, with a good risk management. What he does with 6 out of 10 is that when he's right, he's making this much profit, and when he's wrong, he's suffering this much loss. So it is all about risk management, guys. So to answer your question, Blaine, in a very short point, always calculate the dollar term of your stop loss. I have a stop of 60 pips. If the stop is hit at 1 lot, how much is that gonna make me lose? $600, for example. $600 divided by the size of my account, which is, let's say, for example, 5,000 or 6,000, to make numbers very easy to calculate. $600 of $6,000, you are losing 10% on one trade. That is very risky. You need to get this number, this percentage, the percentage of your stop loss in dollar terms to the total account, to around 2 or 3%. Sometimes, sometimes I push that towards 5%, but not more than that. Okay, guys, so you always need to focus on that. You need to calculate the dollar terms, the dollar value of your stop loss, and make sure that if your stop is hit, you are going to lose 2% or 3% of your whole account. Okay, guys, what else? Michael says, I don't like indicators much, and I agree with you, Michael, to a degree. I use indicators all the time, but I don't use them as the main decision-making tool. No. I make my decision according to the price. The price is the main indicator. So it is the indicator that you need to watch, not the RSI or the stochastic or anything else. These indicators help you see the market, help you see what is happening. Are we overbought? Are we oversold? Is there a cross between the lines of these indicators indicating a change in direction? But unless the market itself, the price itself confirms this, then you can forget about it. Okay, guys, what else? Also, Nick, I like that, Nick. Nick is complaining about the indicators because they are like his girlfriend, very hard to understand. Well, they're not very hard to understand. I think, yeah, girlfriends can be harder to understand than indicators, but they both need some studying. You know, you need to watch the patterns in both cases and then try to understand the situation. It's very tough to understand, but I need it. Yes, I agree with you. You need it because they can make you see the market in a better way. Okay? Now, Michael prefers to be solo without a girlfriend. Well, maybe you can get married to the market, Michael, and spend your time trading and achieve a lot of money and a lot of profit and a lot of success. Who knows? Maybe this is a good thing, not having a girlfriend. Oliver, hi, how can I get the $500 trading fund? Of course, that comes when you join your QTime FX, when you open your live account with us, and after that, of course, you are going to get the bonus. Please contact us at FX_Educast via Telegram, and the guys at the FX Educast team, of course, they are going to be extremely helpful, very friendly team, guys, and they are going to show you how professional support is done. They are very friendly, they offer great support, they have the answers you're looking for, so please do not hesitate to contact us via Telegram, FX_Educast. Michael is asking about the bonus. Of course, we're still doing the bonus. Of course, my friend, we are still doing the bonus. Nick lost 30 pips on the euro. Then I suppose that you were short, buddy, because that is not what we recommended yesterday. We recommended the long, and the long made some profit. Not a lot of profit, a little bit of profit. But if you were short, of course, you would have suffered a loss. Also, it's not going to be a very large loss because the market did not move much in either way. Okay. I'm tempted to try euro dollar right now. Well, buddy, just look at the screen. Can you see this? Can you see this here and here? These are your recommendations for today. And you can go and place these orders in your account until the end of the European session. If by then they are not triggered, then please cancel them. If they are triggered, then you have a position on the euro dollar. With this, guys, I'm very glad that we have spent some time talking about your comments, your requests, your questions. Thank you very much for your questions about the RSI, about the right trading size, and I hope that I have answered them to your satisfaction. Please let me know if you have any other question about these 2 points or anything else at all. Anything at all, just ask me. Even if it's sport, even if it's football, I don't care. You can ask me anything you want. Okay, so now, yesterday, something very nice happened to the precious metal, but unfortunately, overnight, we lost some of the gains that we achieved. First of all, let me use my template. Yes. These are very old analysis attempts. First thing I want to take a look at when I'm talking about gold today is, of course, the daily chart. Yesterday, we had a good move. Of course, remember when we got to the 40s, on the same day that we said that 1446 was a key support, we got to 1446, only 2.8 pips below our favorite support there, which is the Fibonacci level at 1446.1 to be specific. And then that day closed in the shape of doji. And after that, 2 green days to the upside. Now, this is very good. This is very, very nice looking. However, since last night, we have been dropping. The precious metal has been dropping for a number of hours now. After reaching into the 70s, we are again in the 60s right now. And we need to understand why is that happening. Is it only a healthy correction to the downside before another move to the upside? Or maybe, which is of course, that would make me sad, if this whole move was only a correction and the trend to the downside is going to be resumed. So what do we see on the daily chart? First of all, this is very bullish, the doji here, especially since it happened at exactly the right place we wanted it to happen. I'm gonna draw a retracement. Just take a look at this accuracy, guys. Take a look at this beauty. We are falling. We exactly touch the, I don't think I have used the right. Yeah, we exactly touched the 38.2 retracement level at 46.06, 46.1 is our support. And after that, we have started moving to the upside. Look at these crosses here. This one, very bullish. The doji and the candle is very bullish. The RSI almost touching the oversold, then changing direction. All of these observations are bullish observations. And of course, that helped us yesterday achieve some profit because we were long and we reached our limit. We made some profit on gold. We were happy. You were happy. I was happy. And everybody, and of course, Q-Time Effects, they were happy because you guys are making money. But look at what is happening here, guys. On the 4-hour chart, we have a cross to the downside. The RSI is pointing to the downside. We are failing to cross above the moving average here, which is a little bit scary. And one important observation is that we touched the 38.2 retracement level, then we started falling. The 38.2 retracement level, it was the limit for our long position yesterday. It was 1472.5. We got there. We got a few pips above that, and then we started falling. A very, very accurate recommendation yesterday. It was great. And now, let's look at the hourly chart before I tell you what we are going to do right now. As you can see, guys, we are already trading below the moving average band, which indicates we should be a little bit worried if we are bulls. And of course, because our recommendation from yesterday reached its limit, then we are flat. We don't have a position at the time on gold. We are looking to initiate a position, and if the overall picture is bullish, in my opinion. So if we find the support at a level where we should, just like we did here, we find the support exactly as the most important support for that day. Today we need to do the same. As you can see, we are touching the 38.2 retracement level, which is at 63.5. We are currently at 63.9. What I need to see happening here is a move to the upside. I'm not going to move the market myself. I want the market to move. So I'm not going to initiate a long position just because we touched the 38.2 retracement level. But if we break above the falling trend line after bottoming very close to a key retracement level, then of course I want to be long. Let me fine-tune this trend line, and then we will know where is the resistance to watch. So this trend line is currently running at around 64.80. So resistance. I'm gonna leave this on the chart for you guys. 64.80. And support is obviously at 63.5, but this is only the 38.2, guys. So I prefer to use the next one, the next support, the 50% level at 60, exactly at 60, 1460. And as you can see, we do have tops, intraday tops and bottoms very close to it here. Let me just remove the other retracements so you can see clearly. Here. This is very fantastic, absolutely fantastic, great. So this is going to be our support for the day. 60 exactly. Because we are currently in a really bullish environment because of the many things we saw on the daily chart, including the doji and the bottom very close to a long-term, or at least let's say a medium-term Fibonacci level. Because of these things, it will take only 10 pips above this resistance for me to say go long, buy the precious metal. But I'm gonna place my stop not 10 pips below the support. I'm gonna make it a little bit further than that. So with that mentality, we can start building the strategy for today. So buy at 1465.8. Our stop should be below 60. How about 30 pips? 1457. Is that okay? 88 pips of a stop on gold is okay. It's something that I use all the time. Now we need to find the two targets. The initial target, I'm going to give you the same target for yesterday, the Fibonacci 38.2 at 72.5. That would leave me with 67 pips. Not bad at all. Target 2 also from yesterday, 80.8. So I used yesterday's targets, but I changed the entry for this long position. Now I'm going to use a short that is an exact reverse to that. I'm going to sell if we get to 1457 with a stop above this trend line here, just above this trend line I want my stop to be, and that of course makes it at stop at 1465.8. Now the limit or the targets we can use retracement levels for this recovery attempt that has been extremely impressive so far. I love this recovery attempt, but unfortunately since late last night or yesterday evening we have been dropping. It's still okay. We need up and down in the market, of course. So I'm going to use this 78.6 or 88.6 as targets. 51.7, yeah, That looks like a good target. $51.7. The second target is going to be the Fibonacci level that saved us earlier this week at 46.1. I'm going to leave these recommendations on the chart so you guys can copy them. First of all, I want you to understand that we do have a resistance at 64.8. We are only 6, 7, 8 pips below that at the time being. Once we start trading above this level, then it will be probable that this drop from yesterday high is only temporary, just a pause, and from here we are going to resume the same thing we have been doing for the past couple of days, which is moving north, moving to the upside. And of course, if we start trading below 1460, but I don't want you to jump on the short side of the market soon. Just give 1460 some time to defend the bullish possibility. That's why I placed my short position not 10 pips below it, not 20 pips below it, but 30 pips below it at 1457. Here are your recommendations for now. Buy at 1465.8 with a stop at 1457. The sell is an exact reverse. We sell at 1457 with a stop at 1465.8. Initial target for the buy is 1472.5. I want you to use this one. Or, of course, you can use whatever you like, but it's Friday. Maybe we don't have a lot of time to reach 80.8. Maybe we do. Who knows? We still have 14 hours or so until the end of this week's trading. So 72.8, it's your call. Actually, you can pick the one that you like most. I know most of you guys are going to choose the first one, and that is fine by me. That is great. The first target, 72.5, would make you, if we got in at 65.8 and we hit the limit, that is 47. $67 pips, guys. Are we back online? Yeah, 67 pips and a limit. Here the limit, the initial limit is 53 pips with a larger limit and target 2. So there you go. On the 15-hour, on the hourly, this is the hourly. Whoa, this is good. On the hourly chart, we are just about to have a bullish cross on the stochastic, and also the RSI is about to change its direction. We did not get that yet. Please listen to what I say. We did not get that yet, but I want you to watch this. If we get the cross on the stochastic and if we get the change in direction, the RSI, then our long position would be extremely promising. So don't hesitate to buy at 1465.8, but always manage your risk. As I said in response to your question, guys, always calculate your stop in dollar terms. Keep it something between 2%, 3%. If you have to push it towards 5%, sometimes because you really believe in the move of the market, that is okay. But don't make your stop cost you one stop 10% or 15% of your account. I know it's easier said than done. A lot of traders fall for that. Unfortunately, all the time I see traders who are letting one bad trade eat 15% or 20% away from their account. That is very sad, guys. Keep it between 2%, 3%, maximum 5%, and not all the time 5%. From time to time, it's okay to use 5%. Most of the time, 2 or 3%. Imagine yourself having a bad week and you have 5 or 6 stops hit in a row. When that happens to you, if you are letting each of them eat 10% or 15% of your account, you would suffer a very, very harmful and painful loss in that week. But if you keep each of them in the range of 2% to 3%, then you will still have a minimum 85% of your equity with you to start the next week. And of course, all you need when you are controlling risk in this professional way, all you need is a couple of good trades in order to recover your losses. But if you let your losses take away large amounts of your account, then it will be extremely hard to recover, not only from a money point of view, but from a psychological point of view. You would feel defeated and you would feel like, my God, the market is beating me so hard. How can I recover? How can I come back? How can I get the money that I have lost back? Well, if you keep your stop losses costing you only 2%, 3%, then you will be safe. Believe me, I'm saying this after many years of trading. Of course, I started like everybody else with a lot of mistakes. Not a lot of people told me what to do. And then little by little, I learned how to do this. And now my mistakes are much less, much less than they were when I started this in 2000. So the bottom line, and I'm very happy you guys asked for this question, it is this, guys. Always calculate how much your stop is going to cost you. If it's going to cost you 2%, 3% of your account, that's fantastic. But don't let that number get to 10% or more than that. This is my advice to you. And believe me, this is pure gold. This is the kind of advice that changed my life, changed my trading. I used to just leave the trades open, and even if the market is moving against me, I say, well, okay, we'll be back. And then the loss is 5% of my account. I feel nothing. I don't feel the urge to do anything about that. Then it's 10%, and I start to get worried. Then it's 15%, and I start to panic. Then it's 20 or 25%, and I close my positions. And in one trade, you can lose 20% or 25% of your account. That is how people who lose money in the market do things. And I used to be like this when I started, but of course, I insisted to learn how to do this. And the bottom line of my 19 years in the market is this: risk management is the factor that is going to separate winners from losers. It's not analysis, guys. Analysis is beautiful, it's fantastic. It's a tool that makes it easy for us to predict moves in the market, like yesterday's gold move to the upside. It was done on the chart. We expected this to happen without referring to any monetary policy or news or anything else like that. Just by studying the price behavior, we concluded that gold is going to move to the upside, and it did. So analysis, or technical analysis in specific, is a fantastic thing. But without risk management, it means nothing, because one bad analysis can destroy your account, can destroy what you have been building for many weeks or many good trades. And one mistake, and then you're gone. Your account is slashed in half, or maybe worse than that. And I have seen that happen many times. So guys, you have the recommendations for gold now. They are in front of you. You can copy them to your QTimeFX live account right now. Go to your account, open your account, place these orders, and let's hope for the best, guys, okay? Now, you can also, of course, take a screenshot or write them down and follow what happens to them throughout the day. So with this, guys, we come to the end of our second hour. It is very exciting to have you guys. Nick is very excited because we're talking about the gold, the precious metal, the instrument that moves in a very exciting way, like it did yesterday. And I'm very happy that you are feeling this way. And Blaine is hungry. Okay, well, I'm hungry too, but I'm gonna wait until the end of this webinar. So you get something, you get a quick bite, and come back soon, because we're going to talk about the very exciting chances on the dollar yen right after the break. Michael is talking about the moving average lines. Well, acting strange. I don't know about that, man. They they act the same way every time, but sometimes they are offering very good assistance in determining which direction the market is going to go. Sometimes we are away from them, or they are not offering a lot of help, maybe because they are flat, very close to each other. They are not, the market is going up and down, above and below them all the time, but sometimes they are offering us fantastic help. So with this, guys, I am very happy to have you here, and I am going to take my second break of the day, only 5 or 6 minutes, and we will be back. For the time being, guys, I am very happy to have you here, and I'm going to take this chance to remind you of one important thing, and that is, of course, that this free webinar is sponsored by our favorite forex broker in the whole world, QTimeFX, who is offering you the chance to trade with fantastic spreads, very, very low spreads, 0.4 of a pip on the euro dollar and the dollar yen. Imagine yourself trading with this kind of fantastic spread. And of course, we do not charge commissions. So your total cost for trading is only the spread. And that is a very, very low cost of trading. This is how QTimeFX love everybody of you, every one of you. They love you. They want you to make money. They're offering you fantastic spreads and zero commission. A lot of brokers give you very tight spreads, but then they say, well, we have commission. And that is not a good situation, of course. When you trade with tight spreads and zero commission, that is how you trade this market. That is how you become ready to use any move in the market to make profit and put it in your account. So best wishes to you guys, best of luck. And when you trade with such trading conditions that are very, very attractive, then luck will come to you. Now, our offer is updated, guys. And I'm gonna update you on this. Make a deposit of $300 and get the $500 bonus, or we have a smaller bonus for you guys who are not willing to put that much in their account. Even if you want to deposit only $250, then you will get $150. Even if you deposit $150, you are getting $200 in bonus. I'm still updating myself and updating you on this offer, because we are updating it starting today. This is new. And of course, you can withdraw after trading 1.5 lots. So it is a very, very attractive offer. Contact us at fx_educas via Telegram, and we will be very happy to help you open this account, and we will be ready to answer any question you may have. Our team is very professional. I love the team. I love the guys. They know that I love them so much, and they know that I really believe they are professional. They are going to help you guys, can help you, and they will. So don't hesitate to contact fx_educas via Telegram and deposit any amount that you like and get the bonus that is associated with it. You can get the 500 or the 250. It is your call. We are offering you the opportunity to trade the amount that you like and still get the bonus. So what you're waiting for, contact us and let's open this real account for you, where you can apply the recommendations that we are talking about every day here. With this, guys, I'm going to take the second break of the day. It's going to be 5-6 minutes, something like that. And I will be back with more trading opportunities after the break. See you in 5, guys. Okay, guys, how we doing? We are back. How's everybody doing? I hope you're doing great. I hope you are ready for our last hour of this week. It's the last hour, guys, and I'm already looking forward to seeing you again on Monday. So, of course, with only 50 minutes or so remaining in today's session, we should immediately hit the charts. And the thing that I really want to talk about is, of course, the yen. Yesterday we had two sub recommendations. We got in at 50, and of course later, early this morning, the price was a few pips, 7-8 pips above that. Currently, we are almost exactly at the entry that we got in yesterday. I'm going to delete these, and I'm going to keep this, of course, the resistance. The star resistance for the time being is without a doubt, without a shadow of a doubt, it is 109.37. My absolute favorite level on the dollar yen at the time being. Why is that? If you were here earlier, I'm sure you remember. If you are here for the first time, let me tell you why. Guys, first of all, after the flash crash, the infamous flash crash that we saw very early in the year, the price started recovering, and it did recover in a very impressive way up until 1240 was reached in April. From there, we started falling again. And I want you, first of all, before I talk about the Fibonacci levels, what I want you to note is after this ABC beautiful pattern in which A and C are almost exactly the same size, the price, of course, collapsed. What I want you to note is the high of this pattern. The daily high for August 1st, it was 109.32. 109.32, keep that number in your mind. Now, when we calculate the retracement levels for the whole move down from April top, we find that the 61.8 retracement level, the single most important Fibonacci retracement, is 109.37. So we're talking about, guys, 109.32, 109.37, very, very close to each other. And above that, of course, what I want you to keep in mind as well is that the price dropped extremely sharp from the 109.30s when it reached there in August. It did not drop 40, 50 pips in a week. Guys, it took the price 3 days to move from a high of 109.32 to a low of 105.64. That is brutal. That is unbelievable. Very, very strong move to the downside in very short time, only 3 days, and a little less than 400 pips. So it was very, very strong. The move to the upside. The move to the upside was, to the downside was very, very impressive. And after, a couple of months of not touching or approaching the 109.30s, we started doing so late last month. On the 30th of the month, the high was 109.29, and then we got 109.25 on November 5th. On November 7th, the high was a real test for the 30s. We reached as high as 109.49. But of course, these key and important levels should not be considered broken only because we have 10 pips above them or so. We need to give them time to do their magic. This is what I always say, and I've said this before. Just like with 109.95 on the euro, just because we trade 10 pips below that does not mean it's broken. Same thing with 109.37. Just because we trade 10 pips above it does not mean it is broken. So on November 7th, the high was 109.49. The next day, the high was at 48, extremely close to that, and we got 26, and then we started falling away from the 109.30s, the single most important resistance for the time being, in my own opinion. I'm going to delete this horizontal line. We don't need it right now. Now, after that, guys, we dropped, of course. We reached as low as 108.23 yesterday. We were short when we reached that. We were short at 108.50. Unfortunately, we needed 17 pips more in order to hit the limit that we had yesterday at 108.06. That did not happen, but of course that does not mean a thing. What we are hoping for here is a much larger move than this. We're not talking about 20 and 30 pips. So if there's one condition for a major mega move, if 109.37 keeps pushing the price lower, if it's not broken to the upside in a clear and clean way, then it is done, guys. This pair will collapse. And I say it again. I have said this before, and I say it again. This pair will collapse, and I'm talking about something in the range of at least 450 pips from current levels. I'll let that sink in. I'm not talking about 50 pips here, guys. But of course, we need to update the technical outlook and see if this is still the case. That's why we meet every day here, because of course, sometimes we find very strong bearish indications on the chart, but with new price action, that bearishness gets weaker and weaker, and sometimes it flips right to bullishness. So what we are trying to do here is we are trying to find out, is the dollar yen going to continue moving south like it has been doing for a while right now? And the first observation on the hourly chart, I'm going to look, of course, at the hourly, 4 hour, and daily charts. The first observation is this, guys. You know me, you know how much I like my moving averages, and I make a band and I use it as support or resistance. As you can see here, the price is struggling to penetrate the moving average band, and finally, after a number of candles attempting to go above it, it gives up and it is started falling already. Okay, so this is a weakness sign. Another weakness sign is this one. As you can see on the stochastic, this the fast stochastic has already crossed below the slow stochastics, and that is of course an indication of weakness. I did not reach the overbought levels. It reached just a little bit above the equilibrium level, 50%, and it changed direction to the downside. So everything on the hourly chart is supporting the idea of more weakness. Now, let's switch to the 4 hour chart. The 4 hour chart, one of the most important things I want you to take note of is that we have been trading below the rising trend line from October 3rd bottom. It was a major bottom around 106.40. The actual low is 47. From there we recovered very well, and if you draw a trend line rising from that bottom, you can see that I've been trading below it for a while, a number of candles. Then we are currently, or we did try to go back above this key trend line, only to fail again and drop below it. So right now we are very close to this trend line. We cannot say that one of them, the bulls or the bears, are really winning this fight. So what we need to see happening here, of course, we have weakness on the hourly chart, but what we need to see on the 4 hour chart is the current candle closing below the trend line, the above mentioned trend line. I want to see the price below it. I want to see a close below it for the current candle. So you need to watch the 4-hour chart, wait for the close, and then decide. If this close is below the trend line, that's for our bearish expectations and dreams and hopes. But if it closes above this trend line, then we need to be careful about shorting the dollar yen. On the daily chart, I want to see what happened yesterday, because we got to a new low, which we got to a new low yesterday, which was not enough to break below this moving average band. Unfortunately, we want to see the price trade below this moving average band. The bottom of this band is for today around 108.20. So I really want to see the price below 108.20. And yesterday, of course, the low was 23. So we can consider them to be one and the same and say that 23 is going to be the support for today. So support 108.23. Now we have two levels that we can use in our trading. But of course, since 109.37 is very far, we'll look for closer levels, a closer resistance level to be specific, in order to place my stop above if I am shorting the yen. The falling trend line from November 8th high, last Friday, is currently running around 108.98. And of course, this falling trend line, the next few hours is going to be 96, 95, something like that. So where is a level that we need to care about here? To me, it looks like 92 is a resistance. I want something that is very close to this trend line. So initial resistance is going to be 92. $108.92. Now, with all of these levels in front of me, I can start building my strategy for the day. Should I sell here, or should I wait for the hourly close or the 4-hour close? For that question, we can use the 15-minute chart and try and draw a trend line, rising trend line from yesterday low, and see if this trend line can help us estimate the chances of moving higher or lower. We are already below this trend line, so we cannot use it as support, and that means, of course, we need to stick with 108.23 as our support. So although, of course, the major resistance is still 109.37, I'm not going to place my stop that not because of technical analysis reasons, but because of risk management reasons. When you sell below 108.23 and you place your stop above 109.37, that's a huge stop. We don't want to be doing that. So let me switch to the hourly chart and then start building my strategy for the day. Okay, guys. Now, sell below 108.23. For me, 5 pips are enough. 108.18 is my short. I want to place my stop above, of course, 92. 10 pips above that is okay, I think. So stop at 109.02. Okay, that is 84 pips. That is, of course, much better than having 150 pips of a stop, or 130, 140, something like that. Because if we want to place the stop 20 pips above 109.37, that means it's going to be at 109.57. And imagine yourself selling at 108.18 with a stop at 109.57. That would be, a lot to lose in one trade. So this looks much better from a risk management point of view, not from a technical analysis point of view. So, okay guys, now we have the entry and the stop, and we need to look for targets. So target 1, of course I need to correct this, and target 2. Let's start searching. If we break below, of course, if we break below this trend line and keep moving to the downside, of course, we tried to break below it yesterday, but a recovery is seen. This recovery, of course, because we are failing to cross above the moving average, so it is probable that we continue digging deeper. And usually, what I really use as a target for a trend line breaking is the previous touch on the trend line. So this area here, it was the touch on the trend line. What's the lowest price here? 804. Of course, this cannot be used because it is very close to the entry, and that is why I need to look for something else. When we look for something else, we can do that on the 4-hour chart to extend the price history, looking for other targets. And here, this will actually, it is too close, guys. So I'm gonna use something that is further than that, and for that I'm gonna refer to the retracement levels. I want something that is below this bottom. So I'm gonna calculate the retracements. The 61.8 at 107.62 looks like a very attractive target as a first target. 107.62, that looks fantastic. We are talking about 56 pips of profit, not bad at all. Target 2, now you know me, guys. You know what I think about this pair. It is going to collapse unless we break above 109.37. If we continue to trade below 109.37, this pair will collapse. I'm not talking about a drop of 100 pips, guys. I'm talking about 500 pips, something like that. But of course, that will need time. So my second target is a very attractive target, very ambitious target. But of course, if you are going to follow this target, you need to wait for it. I said this yesterday, I want to repeat it. Guys, when you have a recovery attempt topping extremely close to a key Fibonacci level, like the 109.37 here, we topped here, that means that this whole move is corrective. And when you have a corrective move like this, that means that the odds of trading below the point from which this corrective move started are huge. And that is why my second target should be below this low here, this August low, which was 104.40. So I'm going to place it at 104.40, although of course we can trigger levels that are below that. Imagine this, guys, almost 400 pips from our entry for today, and it's more than 400 pips for our entry from yesterday. So this is the second target. I know it's very ambitious, I know it's very far, but given enough time, I really believe we can get there, with one condition, of course, that we do not break above 109.37. This is a valid expectation, a valid prediction of the market for as long as we are trading below 109.37. So this is it for the sell. Now what about the buy recommendation? Can we issue a long recommendation? Let's see. Of course, guys, breaking 108.92 by itself is not a reason to go long. Why is that? Because we are coming down from what could be a very important resistance at 109.37. So I don't want to be long unless 109.37 is broken. That's why I'm going to use the exact same buy recommendation that I gave earlier this week, and it's only along 20 pips above this. So buy at 109.57, 20 pips above this very important resistance level. I don't want to be long before that, guys. Even if we get above 109, I'm not gonna buy this thing. I'm gonna wait, because again, we can fail at 109.37 or very close to that, even if we start trading above 109. So please do not go long before breaking 109.37, because even if you get in a good trade, and even if you make some pips, 10, maybe 20 pips, yeah, you can, of course you can do that. But if the price does the same as it did the last time, topping very close to 109.30s, then you may not have enough time to close your position, and then the price will collapse and you will be in loss. So buy at 109.57. Our stop should be this needs some thinking, because once we start trading here, of course we need to place a stop that is reasonable. We don't want to be placing our stop at 108.18. That would be a lot. So we need something that is closer, and that is of course we need to get a higher stop. A higher stop means let's say, where do we have here? If we get, there is some method that I use. I start from the current bottom and I stretch out to the entry point. Let's say it is 57, right? So it's here, and then I place below the 61.8 Fibonacci for this move. The Fibonacci is at 108.74, so 108.64 to keep it below the 100 pip limit for this stop. Now the targets, we talked about them earlier, of course. We have the 71.4 retracement level at 10.13, and the target number 2, of course, if we keep moving to the upside, that means we can retest the top from which this whole drop started, which is 12.40. So this is very similar to the buy recommendations given earlier this week. The entry is the same, the limits are the same, but maybe the stop is not the same. So guys, this is it for the dollar yen. Now, what I really want you to always remember, in case you are trading the dollar yen, is how important is 109.37. It is the key level for the time being, without any kind of competition. Okay, initial resistance is at 108.92. We're going to use that as a level to place our stop above, but we're not going to use it as a level to initiate long positions. Support is 108.23. Only with a few pips below that we can go short, and we can hope for the best. So with that being said, that leaves us with 2 recommendations for today. Buy at 109.57, which I don't think will be triggered today, but just in case, I'm giving you this recommendation, with a stop at 108.64, initial target at 10.13, and target number 12.40, the April top. Now, the recommendation that I really hope gets triggered is the sell, of course. Sell at 108.18. Our stop is 109.02. Our initial target is 107.62. You like your small targets, guys, and the major target for the drop, given enough time, of course, is 104.40 and below. Not only 104.40, but even levels that are below that. So with this, guys, we finished the dollar yen. We're going to move to another instrument, but I'm going to keep these recommendations on the screen for a minute or so. So if you can, if you want to copy them, if you want to go straight to your QTimeFX trading platform and place your orders now, please use these numbers. And always, guys, please use the right size for your account. This is a major thing that you need to always take care of. Always trade the right size for your account. Never trade a size that if the stop is hit at that size, you will be losing 15 or 20% of your account. Never ever do that. No matter how much you believe in the analysis that you see in front of you, done by you or by another service, analysis service, recommendation, signal service, no matter who gives you the analysis, yourself or somebody who runs a professional service. In all cases, what you need to do is always to calculate your stop in dollar terms and then calculate what percentage is the stop to your whole account. So if it's only 2%, 3% of your whole account, you say to yourself, well, even if this stop is hit, I'm going to lose 3% of my account. Big deal. It's okay. 3% is not a lot. And you have to risk money to make money, of course. So risking 3% is something that is not very risky, of course. Even if you get 3, 4, 5 bad trades in a row, each of them losing 3%, that will add up to 10, 12%, something like that. And you will still have 85 to 90% of your account with you after even a streak of 4 or 5 bad trades. And that is great. But if after 4 or 5 trades, you are left with only 50% of your account, then you are not going to make it in this market. So this is the most important thing I want to leave you with, guys. Always calculate the dollar value of your stop and then turn that into percentage of the size of your whole account and keep that percentage between 2 and 3%. If it's more than that, lower the trading size that you use. Okay, so what's next? Let's talk about the pound. If we have enough time, we're going to talk about the Aussie, but the pound is more important to me. I know it is more important to you guys. Okay, so the pound. And let's start with the daily. Of course, guys, the main thing on the daily chart of the pound is, we talked about this earlier last week, it's the failure to break above the 71.4 retracement level for the whole drop seen from spring of this year until September. This level is at 29.75. Imagine that we only traded a little bit above that. We got to 30.13, but of course we were unable to hold on above that level and we started falling again. Now, this is of course bearish, especially that we tried again later to break above 29.76, only to top on the 31st of October at 29.76, exact touch, not one pip away from that. And then the next day on November 1st, the high was 73, 3 pips above this level, which of course confirms the importance of this unbelievably important level. I love this very much, guys. Now, we started falling as expected, of course, after we failed to break above a key retracement level like the 71.4, my own level that I'm very proud to be the discoverer of. When you fail to cross above it, of course, you should expect weakness like this. For many days, we were dropping on the pound, and from 29.76, we dropped to 27.69 before recovering again. On the indicator front, we do have some kind of a weakness sign here on the MACD, but it's still, you know, the two lines are still very close to each other. I want the MACD to start falling down away from the signal line, and at the same time, the RSI is also promising because we were overbought and then we changed direction. Now, this could be just a little bit of a breather before we we continue moving to the downside. Stochastics gave a long signal, but it was almost a week ago, 5 candles away, so it might be too late to follow. I don't know. That's why we are going to look at the 4-hour chart and hourly chart, looking for more clues. Okay, on the hourly chart, what we see here is an attempt to cross on the stochastic. As you can see, the fast stochastic is crossing below the slow stochastic, and that is of course something that is bearish. However, we are still trading above the moving average band, and that's why we can use this band as a support. As you can see here, the band is between 37 and 47, so we might be using this as a support for today. We need, of course, to run a few lines, horizontal lines, trend lines, draw them on the chart, and then decide which level are we going to use. The rising trend line is currently at very close to 40. Very close to 40, and that is why I am going to use, of course, I'm going to look for something inside this area between 37 and 47 to use it, or maybe we can use the bottom of the area, the top of the area. We'll see which one is closer to the trend line. At the time being, it's closer to the bottom, but of course it's a rising trend line. So in a couple of hours from now, or in a couple of 4 hours candles, it's going to be closer to the top of this area. That's why I'm going to consider my support to be at 47. So support, the first thing I want you to note is that support at 128.47. The resistance is also, I think it will be easier to identify because we can use the retracement levels for this drop. And as you can see, guys, the highest price seen during this recovery attempt is very close to the 61.8 retracement level. The retracement level itself is at 28.94. We got here to 28.98, only 4 pips above it. And then on the second attempt, it's 88, only 6 pips below it. So 4 pips above, 6 pips below here. Both of them are indicating that 28.94 is the resistance. So resistance 28.94. When you have the resistance support within 50 pips of each other, that can make it easy for you to build your trading strategies. So now I want to be positioned in the direction of a break of either. I'm not taking any sides here. Feel strongly about one direction or the other. We can drop or we can find support around this moving average area and the trend line, and then we start price again. That's why I'm going to let the market pick my position today. I'm not going to pick sides before a break of the support or resistance. So with this in my mind, I will start, of course, building my trading strategy. Yesterday we had a long, of course, and we made a very small amount of profit. I think it was 12 pips or something like that. So, of course, it was made by the time that this webinar started, not by reaching the limit. The limit was, of course, it's not going to be 12 pips. So, guys, if we break the support, we are going to sell. Let's say, initially, let me try 10 pips below the support and see where that goes. 28.37 with a stop 10 pips above resistance at 29.04. How does that look? It looks okay because we have 67 pips of a stop for this position. Not bad. Target 1 and target 2. Let me see where these things Target 2, I'm going to use 127. I'm going to show you why. We talked about this level many times this week. 127 is a very good target to the downside because it's a retracement level. I'm going to show you that retracement level in a minute. But let's first look for a closer target. In my own opinion, we obviously have something in this area. As you can see, we have been seeing lows in the teens, 28 teens. For example, this is 13. Or early 20s, this is 21, this is 20, and this is 23. So between 13 and 23, we have many lows in these candles. And to specify exactly which level I want to use as my limit, of course, I'm going to use the retracement levels for this move to the upside and see which one is the closest to the area between 13 and 23. And it is very, very obvious. 28.17 is an area which we really need to break in order to open the road down further south to better targets. Of course, if we had a short that is higher than this, I can use 17. But when I sell at 37, I'm not going to give you a limit at 17. That's why I'm going to continue looking for another level. How about the 88.6? Let me see if it's very close to this bottom here. This bottom here is 92, while it is at 82. Yeah, that is good enough for me. 10 pips apart. So I'm going to use 82. 1.27, 82. 55 pips in initial target, 137 pips in the second target. That is a good trading strategy. From a risk management point of view and from a technical analysis point of view, this looks like a good position. Now, what if the price moves higher and we again push on, or not again, for the first time? Of course, we tried to push beyond 28.94, but we failed. So if we can push beyond 28.94, our resistance for the day, I want to be long. And I will not hesitate to follow the break of either of these levels, guys. Not taking sides, I'm reminding you. So, buy at 129.04. Stop at 28.37. Now I want to look for targets to the upside. Target 1 and target 2. I'm going to switch to the daily chart for a minute for two reasons. First, I want to show you why 27 is a target. Oh, that's a mess here. I hope you can read through this mess. Are you the kind of person who can handle this kind of mess? I really hope so. So guys, why 27 is my target? Because of this, the 38.2% retracement for this unbelievable move to the upside is at 27. This is why 27 is my target number 2. But what I'm gonna do right now is to look for upside targets. So if I get in at 29.04, where can I place my target? Of course, I want it to be above this, maybe testing this top here, or maybe at this level. Does this make sense? 29.75. Yes, it does. 29.75. 29.75 is the retracement level that the bulls tried to push beyond many times, but they failed. They reached as high as 30.13, but they failed. And that is why I'm going to use 30.13 as my second target. They're not very far from each other, around 40 pips, 38 pips to be exact. And with that, of course, we now have a trading strategy on the pound. I'm not picking sides here, guys. Any level that is broken, I'm gonna follow the direction of the break. We have a support at 28.47. We have a resistance at 28.94. Anyone that gives way is the one that we are going to use in our trading today. Break a support and we sell. Break a resistance and we buy. These are my my pound recommendations, the cable recommendations, and with this, of course, guys, we finish the pound. I want to really look at is yesterday's dollar Canadian chart that we talked about. We talked about just like yesterday, we don't have a lot of time for the Canadian dollar. We are always running out of time because we have a lot of things to do to talk about, and because you guys have been very exciting to talk to today. I still have more comments. Aaron, hey Aaron, how you doing, buddy? Blaine is very nice to me. You are very kind. And I appreciate your presence, of course. I appreciate every one of you guys here, and thank you very much. And thank you, buddy. Thank you, Blaine. This is really very nice to hear that you guys feel this way about me. So thank you very much, and I really hope that we will be brothers forever, buddy. Blaine says he did not make much profit before seeing my webinars, and that is the kind of thing that makes you feel very good about what you do. I love making profit for myself, but I honestly love it more when I make profit for other people. You may find that strange to say, but I swear to you, this is the truth. When I help people make money, when I give you recommendations like the good ones I gave you yesterday, and you come back to me and you say, man, I followed this recommendation, I made some money, thank you. That makes me the happiest man in the whole world. And of course, I will be in on the same recommendation. So I'm going to make money for me, and I want to make money for you. And when these things happen, I am a very, very happy man. So Blaine, do you want me to call you Ram Heinz or Blaine? I don't know. You let me know. Since we're brothers, as you say, then please let me know. I really, really appreciate what you're saying here, buddy. And I'm going to leave you a comment. From now on, we are brothers. And I wish you, of course, I always wish you profit. So pound it, buddy. Okay. So guys, with this, we should use with the very few minutes that we still have for today and for this week, the last minutes for this week, to talk about the Canadian dollar. Yesterday, we noticed that we did not issue any signals, but we said that we should follow what is going to happen and look for additional information in order to be ready when a trading opportunity is confirmed. Now, failure to break above 71.4 retracement level here by itself is a reason to expect a drop, but we need more confirmation. If this happens, of course, it's going to go along very well with our predictions for euro, gold, and the dollar yen, because on all these fronts we are expecting dollar weakness, American dollar weakness, and Again, here at the Canadian dollar, if we continue to trade below 32.59, that would also indicate American dollar weakness. I really hope that is how things go, but of course we need to look into it. We cannot just say that only because we failed to break above a retracement level that this pair is doomed. No, we need to spend more effort than that before we pick sides. If you take a look at the RSI, I love the RSI. It's getting just a little bit above 70 and then changing direction. I love that very much. Stochastics is not very helpful because both lines are almost horizontal. They are touching very, very close to each other. The the MACD is not supporting the idea of a sell yet, but who knows, maybe then we need some time for this indicator to join the kind of weakness that the RSI is implying. However, we are still trading above the moving average band. This is not weakness. So what I'm going to do right now, of course, I'm going to switch to the 4-hour chart to read the indicator opinion there. And up until now, as you can see, it's obvious that we are still finding support in the moving average band. Just look at this, guys. Since we traded above the moving average band late in October, we have been finding support in the moving average band inside it. For example, November 5th low, November 6th and 7th lows. The November 5th low was inside this band, very close to its bottom. 6th and 7th, they were very close to the top of this bottom. And again, the low that we have seen only hours ago is inside this band. So up until now, no, we're not going to short this thing. I want to see more than this. Failure to break above 59, 32.59 is a good start, but it's not enough for short position. To me, what I really need to see is a break of a trend line that is rising from recent bottoms, especially if this trend line is very close to the moving average band. And just look at this, guys. I draw this trend line connecting October 29th with November 5th lows, and it immediately touches the current daily low. Immediately. Okay, with unbelievable accuracy. Just look at this, guys. Look at this. Unbelievable. It's like an exact touch, not a pip below, not a pip above, which means, of course, that this is an important support. However, this is a rising trend line, and for the current candle, it's a little bit above the current low. It is around 17, while the current low is around 14. So every candle, this trend line is going to rise about 3 pips. So for now, without breaking below 17, or maybe we can push it up a little bit because the next candle is going to be a little bit higher than that. I'm going to use the bottom of this candle, the low of this candle, 32.21, as support. And I think I'm going to issue my last recommendation for the week. So before buy, we're going to identify the support and resistance. Resistance is obviously at 32.59. Support is going to be at 32.21, and we are running out of time, so I'm going to jump right into it, and I'm gonna issue my last recommendation for the I'm gonna buy if we break above the resistance. I'm gonna sell if we break below the support. Very simple technique. So buy 10 pips. Because it's a retracement level, it's 71.4, I'm going to use 20 pips, so 32.79, but 10 pips below the support is enough for me. Stop is at 32.11, sorry, 68 pips on the Canadian dollar. That's a very good stop. Now targets: target 1, target 2. Let's look for targets. I think it's easy to use the 78.6 and 88.6 as a potential target. targets. The 78.6 is very close actually. It's at 32.80. While 33.11 is 33.11 good enough. Well, it is only 32 pips. I want to push it up until the top from which this drop has started, and that is 33.46. So I'm going to place my initial target at 33.46, and I'm going to look for a better target. We have not been at this high a lot recently. Whoa. So 33.83. I don't find a resistance or support, previous resistance, previous support that deserves a lot of in this area more than the previous top, that is 33.83. So two targets that are relatively close to each other. Now, what about the sell? Of course, we sell if we break the support. The sell recommendation is going to be an exact reverse to this one. So it is a sell at 32.11, stop at 32.79. Now let's look for targets. Target 1, target 2. So if we sell at 32.11, which means here, just below this trend line, then we can expect the price to try and push beyond this moving average area. One of the techniques that we can use is calculate retracements for the last part of, not the whole recovery trend, but the last part in itself. And here, the 71.4 is at 31.57. That makes a good target in my own opinion. 31.57. While the second target, of course, it should be much better than that. The bottom from which wave C started, if this is an ABC, is 31.12. And to make it exactly 100 pips, I'm going to use 31, not 12, but 11. I'm going to add a pip to that bottom. And with this, guys, we are now ready to take advantage of, I'm going to delete this, we don't need it. And this as well. I don't want too much noise. I just want you to focus on the signals for today. Please, guys, screenshot them or go straight to your QTimeFX account and place the orders immediately. Because the resistance is at 32.59, we are placing our buy at 32.79 with a stop at 32.11. Initial target 33.46, a more ambitious target around 40 pips above that at 33.83. Because the support is at 32.21, our sell order is going to be placed at 32.11 with a stop at 32.79. Now our initial target is going to be 31.57, and again target number 2 is going to be around 45 pips below that at 31.11, exactly 100 pips. This is it for the week. Love you guys. Thank you very much for being here. Last comment from Michael. Michael is saying thanks. Thank you, Michael, for being here, for giving me the opportunity to give you these trading recommendations. So thank you, guys. It has been a wonderful week so far, and I really hope that today's recommendations are going to complete the profit that we made this week. They are going to do the same as previous recommendations all through this week, which were very good, and I'm very thankful for that. So keep these recommendations with you guys for the rest of the day. We still have 13 hours until the market closes for the weekend. Enjoy those 13 hours. Enjoy trading, enjoy the opportunities that you find in front of you. Be ready to use any trading opportunity that is on the chart, in the market, and of course always use sound and very good risk management. And with that, guys, we come to the end of yet another week. and another adventure in the market. I'm very excited because you guys are here with me, because I'm giving you these trading recommendations, and I really I'm looking forward to meeting again on Monday and discussing what happens to today's recommendations, and then later, of course, finding fresh trading opportunities for next week. Stay safe, stay in full management of your risk, stay on top of your account, be careful and be ambitious, look for great trading opportunities, and at the same time keep a grip on your account. Don't let things get out of control. Manage your risk wisely, use technical analysis for entries, stops, and limits, and always be ready to take advantage of the market when it moves in your direction. With this, guys, I am very happy to have been with you all this time this week, and I'm looking forward to next week already. You have a fantastic weekend, but before that, please, we still have 13 hours. Focus on the market until it closes and try to get the best of it. And later, enjoy your weekend. We all need that. Of course, we need time with the family, with the wife, with the kids, or maybe with the friends, going to a football game or something like that. Do whatever pleases you. Recharge and get ready for another week of profit next week. Love you all. Thank you very much for being here. And before I go, what I want to remind you of is, of course, that this free webinar is sponsored by QTimeFX, our favorite broker in the whole world, who is offering you the chance to trade with unbelievable spreads and at the same time, zero commission. So you can count on QTimeFX for fantastic trading conditions that will not cost you a lot to get in and out of the market. These are very great trading costs, in my opinion, and I have tried many brokers, and this is an offer that I really think is really attractive, really good. And on top of being able to trade with such unbelievable spreads and zero commission, we are offering you the chance to get a bonus of $500 or $250 when you open your account with us, of $300 or $150. So go ahead, contact us at fx_educast via Telegram, because this offer is about real money, guys. We're not offering you trading credit. No. We are offering you real withdrawable money when you open your account with QTimeFX. So contact us, fx_educast via Telegram. Our team is professional and friendly, and they want to help you in every step on the way with a smile on their faces. So contact us now. Let's open this account for you. Or if you have any question at all, just contact us. You can ask about the offer. You can ask about anything you want about opening accounts, and then you can open your account with QTimeFX and enjoy, first, tight spreads, and second, zero commissions, and third, the very generous bonus. And of course, finally, you will be able to enjoy these webinars every day, because QTimeFX is sponsoring them and wants you to make money, wants you to make profit in the market. Thank you very much for a wonderful week, guys, and see you on Monday. Take care, and as I always sign off, good trading and good luck. Good luck to you guys. Fantastic 13 hours left. I wish you fantastic 13 hours in the market, and then a great weekend, and see you on Monday. Good trading and good luck. Bye-bye.